Hello traders, this is Dimitrios Karalampidis from Snail Trading, and in this video I'm gonna present you my view on the Australian dollar. It was an impressive week last week with some big moves, but what actually happened in the Australian dollar and how that affects the future of the currency, the direction that the pair will take in the coming weeks and months. Looking at the weekly chart, we see that the momentum still remains supported by this upsloping trend line, but it is still below the neutrality area, which puts pressure and keeps the long-term momentum bearish. We have another attempt this week to move above the 21 week SMA, and although we had a close above the SMA, it is just 2 pips and it should not be considered as a break of the resistance, of course. The positive sign here is that the RSI has a steep upward, not very steep, but it's slope, it's upwards, and the oscillator remains above the 9 period SMA, and thus we could expect higher prices in the coming weeks. But let's go into lower time frames to see what's going on within these candles. Looking at the daily chart, we see this is actually the chart that has the most to show us in the Australian dollar. After this break here above the 21 day SMA, the red one, we had also a break above the declining trend line in the momentum, and as I warned with a previous report that this may be a change in the mid-term momentum of the pair. Since then, the oscillator is moving sideways, but it remains above the 50 neutrality area, and that keeps the momentum bullish. Let's say it is not clearly bullish, but since it is above the 50 area, it has bullish signs, and it may be better explained as mixed to bullish. The most interesting part here is the price action after this break. We see how prices continued strong to the upside after testing the SMA here, and they found strong resistance on this trend line that connect all those lows and the upper boundaries of this multi-month bearish channel. A sharp drop occurred on Friday. That was Friday 2 weeks ago, and after that, the last week we had two attempts to move below the 21 day SMA, both of them rejected, and small candle bodies here, which resulted in sideways movement and a concentration of all those 3 SMAs at very near at a very narrow range here, not range, very narrow prices. Then we see how prices are trapped between the support that is provided by this SMA and the resistance that is provided, let's say, from the other 2 SMAs, and more importantly by this trend line, the upper boundaries of that channel. We had a break here, and prices couldn't maintain the bullish strength here, and they dropped back again. And on last Friday, they attempted to move below the SMA, and they were again rejected, creating a very interesting candle here. If we zoom in, we see the large wick below the candle and a very small body here, which qualifies this candle as either a hammer or a hanging man. The problem with both interpretations is that if it is a hammer, it should be at the end of a downtrend, like it was here. And here we have more an uptrend than a downtrend. So if it is not a hammer, it could be a hanging man, which is a bearish pattern. And if it is a hanging man, the problem with that interpretation is that it should happen up here and not down here. Hanging man occurs at the top of an uptrend and suggests that prices will move lower from there. What is more important here, it could be either a hammer or a hanging man, but both patterns need confirmation, and that means that we either need a large bearish candle to follow to confirm that this is a hanging man, or we need a large candle, a bullish candle, to confirm that this is a hammer. The point here is that prices are exactly at the level of this trend line, and at least we know that in the coming days we will have a more clear pattern whether we are moving higher or lower, because at the current point prices are trapped into support and resistance of those patterns, those SMAs, and this trend line. The momentum seems to be mixed to bullish, so at the current point, unfortunately, everything is possible. We will be looking at Monday's candle here after its close to eventually get some more information. The point is that if we have a bullish candle, we will be more confident that the downtrend, this long-term downtrend, have actually finished here, while if we have a bearish candle, there is always the possibility that we will have again a reversal higher. So in order to have a more clear pattern, we need a large bullish candle on Monday here, which will suggest that we have a break outside this channel, and prices will continue to much higher levels in the coming weeks and months. So let's move a little deeper now to the 4-hour chart, and we can examine here what are the possibilities. We're mostly confident that this top here was wave 4, and we expect from this top a 5-wave move to the downside to complete a wave 5. We have 5 waves down for wave 1 here, and this choppy action suggests that this is a wave B that overthrown that moved below the level of wave 1. This is possible on as a pattern of Elliott wave as an expanded flat, let's say, and then a 5-wave move to the upside that complete wave C and wave 2, and from there, unfortunately, there are several ways that we can count this move to the downside. Well, if this is not a wave 3 but it is rather wave 1 of 3, that means that all this price action that followed could be a correction within the wave 3 that will move prices to much lower levels. The problem with this interpretation is that wave 2 has moved a lot in time to be considered as a wave 2 of such a small degree, like would be wave 2 of 3. But since in Elliott wave theory there is no rule but only suggestions with regards to the time length of the waves, this does not invalidate the count that suggests that this whole price action could be a wave 2 of some degree. And actually, if this is a wave 2, it is possible that it has already ended here, which prices found strong resistance at the 78.6% retracement of this move, which is a common retracement for wave 2s. And this decline here, there are several ways also to count this decline, and I will guide you through the alternatives looking at the 1 hour chart in a minute, but let me talk a little more about what we see here. We have a double bottom pattern here. Actually, this low with this low have as little as 2 pips or even less pips difference. This is shorter. This low is shorter, and more often than not, when we see double tops or double bottoms, we're talking about wave 5, a wave 5 formation that is called a truncation. When it appears in a downtrend, truncation is a strong bullish signal, and when it appears on a bull trend, is a strong bearish signal. The fact that after this low here, after the double bottom pattern, the pair has rallied almost 400 pips, confirms that this is probably a major bottom for the pair. However, as long as we don't have a break above this high here, we cannot be sure about the importance of this low. If that's the case, and this is the wave 5, then we must the price action that follows must be an impulse, and the overlapping waves that followed does not leave us with many options but to count this move as a leading diagonal if we want to count this as a bullish pattern. And if it is a leading diagonal, we have an ABC for wave 1, ABC for wave 2, ABC for wave 3, and this decline here, which is which we will talk about later, we can count it as an ABC for wave 4, and thus we're expecting another ABC up to near this trend line, or at least this near this level, to complete and higher than this level, of course. This is the minimum requirement to complete the leading diagonal to the upside, and then expect another correction, probably an ABC form, if not a complex correction, to the downside for a wave 2 before we move higher. So overall, we expect much more choppy price action in the coming sessions, and unfortunately the picture will not clear very soon. Let's go now to the 1 hour chart to see a little bit of the internals of those moves and explain the alternatives, the possible alternatives that exist. Okay, here it is, the 1 hour chart, and the I was talking about this low here and the ABC that I was talking before, and we have ABC here and ABC here, and here it is the disputable, let's say, price action here. We have 1, 2, 3, 4, 5 possibly wave B, and 1, 2, 3, 4, 5 to the downside. The problem with this 5 wave move to the downside from here is that wave 4 has so deeply retraced that it almost reached wave 1 territory, although it didn't, and it does not invalidate the Elliott wave interpretation of a 5 wave move. If we go into smaller time frames, let's go to the 15-minute time frame to see a little bit of the internals of those moves and examine the different scenarios. So here we have overlapping waves. We see how these spikes here enter into this territory, and thus this is probably again a leading diagonal here. We have A, B, 1, 2, 3, 4, 5, and this is a wave 1, and then we have A, B, C, or W, X, Y probably for wave 2. This is a sharp decline that is probably the end of wave 3, and an A, B, C for wave 4, 1, 2, 3, 4, 5 for wave 5, which completes wave A here, A, B, C for wave B, and here what I was talking about, 1, 2, 3, 4, and here is how deeply retraced wave 4. You see just a few pips lower than wave 1, and this is wave 4, and then 1, 2, 3, 4, 5 in here. We cannot be sure whether this is the correct way to count this decline, and it could be also 1, 2, 3, 4, and then an ending diagonal of ABC1, ABC2, ABC 3, ABC 4, ABC 5, and thus this whole move is a 5-wave move to the downside. The problem here is that first of all, we are limited up to 1 minute chart, and no matter how strong we try to count the waves and come with the sure thing, the surely correct pattern, we're unable to do so. The other problem is that we cannot be 100% sure about the reliability of the price action. I mean that the broker, how reliable are the prices that the broker provides us with. So it will remain a big question mark, this price action, until a pattern in the larger time frames shows us which is the correct path. And as we continue here to what happened after this low, things are getting even more difficult. Sharp up move here, then correction, then sharp up move, then another correction, and a lot of waves that look like ABCs, but in the way that they are represented here, it is very difficult to count it as with a certain degree of confidence, at least, as an exact pattern of Elliott wave. Even if this was the end of wave 2 of a correction, and this 5-wave move decline to the downside from here, that would mean that this is actually a correction, and then we're heading to much lower levels from here. What could this be in terms of Elliott wave? Could this be ABCW, ABCX, ABCY, and ABCX, and then another ABC as Z, which will finish wave 2 here as a complex correction. But then again, the price action that followed here, it is first very difficult to count it as an impulse, and second, the rebound that followed is even more difficult to be counted as a correction, at least for now. So if this is wave 1 and this is wave 2 finished here, then we need a 5-wave move to the downside here. So let's go into smaller time frames and examine that situation here. Looking at the 15-minute chart, we have here overlapping waves, and again, and let's say that this is a 5-wave move to the downside for wave 1, and then we have A, B, C for wave 2 here, this to be a leading diagonal, and then this 1, 2, 3, 4, 5, and we miss another 4, 5 that we need if that's the case. The other situation would be that this is wave 1, and we have ABCWX, ABCY here for wave 2 here, 1, 2, 3, 4, 5, and this should be a correction. And this is so sharp and so impulsive that it's very difficult to be a correction, at least for now. Also, looking at the depth of the retracement, it has already reached the level of nearly 78.6% of this decline, and thus it is very difficult to be a zigzag correction. It should be something like, let's say, a flat, and if it is a flat, we need now to follow an ABC down here, and then another 5-wave move to the upside, and then again to the downside. And overall, there are so many alternatives that it is very difficult to say what is going on. So we prefer for now, and based on the fact that on the 4-hour chart, this level of at 71, the psychological level 071 provides for now very solid support, and the fact that also this 144 period SMA also provides solid support. After it was broken here, we see test here, test, another attempt to move, rejected, again to move, attempt to move below it, again rejected, another attempt, again rejected, and this Friday, last Friday, another attempt to move near it, again rejected. So as long this support here remains, we are more bullish than bearish, and therefore although we cannot exclude the possibility that prices will have something like this A, B, C here and then break finally lower, we prefer the more bullish scenario. Of course, with the interpretation of this move here up to here to be a correction, there are also problems with the internals of the counts, of the internals of the waves, excuse me. And the main reason that makes us believe that it's probably a correction is the rejection at this level. But this is not it's something that is not so important, because this level can provide resistance also to a leading diagonal that we are counting here. Also, if we extend this trend line here, we will be looking for a break below the SMA, a break below the 71 level, and a break below this trend line to consider a bearish scenario. There is also another possibility, another scenario that's still bullish, which would suggest that wave 3 in parentheses finished here. This wave 4 is in parentheses, and this is wave 5 in parentheses, and the leading diagonal starts from here with ABC for 1, and this wave 2, this wave 3, and this wave 5, which finished the leading diagonal up here, and thus this is A, B, and C that will finish somewhere here. We have also strong support here. We see this level is also very important here. It is around the 6950 area, and it is very important. But the problem with this account is that wave 2 here has retraced almost 99.9% of this move, and it makes it very less likely than this count that we're considering here. Also, if that would be the case, with leading diagonal being ended here, the fact that prices will have to move again to such a low level, breaking below all these SMAs and the momentum turning deeply into bearish territory, will make it less likely that we will have a reversal from here to the upside. So we're sticking to this leading diagonal bullish scenario as long as prices trade above this level that I mentioned before. And if we see a break of this level, we will consider a much more bearish scenario, which of course, given the overlaps here, we have 1 of 3, 2 of 3. That means that looking at the daily chart, for example, this should be 1, 2, 1 of 3, 2 of 3, and wave 3 of 3 therefore has to move to much lower levels, which in order to complete all the 4 and 3s and 5s that will follow from such a development, we will see the pair moving very near, let's say, to the 0.55 area or something like that. If we see on the weekly chart, also breaking below here, which was the low of what we believe is wave 5. If we break below this level, we open the path for at least this level here, as we can see how support and resistance was in the past here. This is an important level here, you can see it. And if we have a break below this level, we're heading towards at least this level here, the 0.63, the 0.62, and of course the low here, which was the 0.60, will be a very strong support level. However, I don't believe that we will see such a scenario. The US dollar seems vulnerable to more losses, and so do the stock markets, and I personally prefer the immediate bullish scenario from here. With regard to the weekly chart, we need a candle like this one to close well below this SMA to gain more confidence on the bullish view. And on the daily chart, as I said, we're very near to a break of this channel. I want to see this break to become more bullish. And of course, on the 4-hour chart, we need this SMA to hold, to continue to hold, and prices to move impulsively from here to the upside, at least higher than this level, to complete our leading diagonal scenario. And then we will expect a 3-wave move to the downside for wave 2, which will probably again drop down to the 71 level, which appears to be the most strong support lately. We already have an impulse here, some correction maybe, an impulse to the upside. Okay, this 1, 2, 3, 4, 5 ending above this level, and then A, B, C to the downside before we have an explosion to the upside. That concludes my view on the Australian dollar. I hope that the video was informative. Feel free to post some comments on YouTube or at snail-trading.com, excuse me. And happy trading next week. Thank you for watching.